makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. Here's what's coming up on today's programme. Global stocks set to hit record highs as investors await today's all-important US CPI print. Meanwhile, Fed Chair Jerome Powell reiterates that rates could stay higher for longer. Burberry sales tumble as the UK luxury label warns of a challenging first half. We'll bring you a roundup of a busy morning of European earnings. Plus, the Qatar Economic Forum, powered by Bloomberg, enters its second day. We'll bring you all the big conversations from today's panels on energy, geopolitics, finance and more. And coming up, we'll also bring you more exclusive interviews from Doha on politics, commodities and trade. Well, Francine Lacqua is hot-footing it from that excellent panel she just hosted. But let's just take a look at European equities as we are an hour into the cash trade here. The good vibes continuing from yesterday. You did have the global equity index hitting a record high. And across Europe, you are seeing green across most of the indices. The FTSE 100 higher 0.5%, but the CAC 40 just flat to the downside. The DAX, though, up 0.3% as well. And if we break it down by sector, you've got about three-quarters in the green this morning, led by real estate, higher 1.1%. Basic resources not far behind, higher 0.8%. But bottom of the basket are consumer products and services. They're lower more than 1% this morning. Just a couple of shares I'm keeping an eye on this morning. Burberry is currently down rather a lot. It was down by more than 3% earlier. Now it's just 2.6% lower. But this is, of course, on checkered sales. We had earnings this morning, sales tumbling because of weak demand in China and the US. And Commerzbank, meanwhile, is up 3.7%. This also on its earnings. It lifted its lending outlook after beating estimates. If we flip over to the cross-asset picture, we can look ahead to the Wall Street Open. US futures are pretty mixed this morning. S&P E-minis flat to the upside. Of course, as I say, it's inflation day over in the US. We await that CPI report at 1:30 p.m. London time. And the expectation is inflation moderated in April for the first time in 6 months, at least at the headline level. But core CPI projected to rise 3.6%. Still too high to warrant rate cuts in the eyes of some on the FOMC. But yesterday we had the S&P closing up 0.5%, despite Chair Powell's signals that rates will be higher for longer, and a mixed reading on PPI, as he framed it, at least. And as I say, futures mixed stateside. But that PPI print did mean traders positioned for a sharp drop in yields. And you can see the 10-year Treasury yield currently lower 2 basis points at 4.4%. The dollar is a touch weaker and cable is a touch stronger at $1.25. In terms of oil, Brent is currently trading at $82 a barrel. And we have the latest numbers out of the IEA this morning. Their report dropping across the terminal just now. So let's take a look at the top lines. We have the International Energy Agency saying that the outlook for global oil demand growth this year continues to soften. The macro backdrop, of course, the economic slowdown in Europe, poor industrial activity and another mild winter really sapping consumption. Also, just factor in the abundant US oil supplies offsetting Middle East geopolitical tensions and those production cuts by OPEC plus. And it all brings us back to inflation, doesn't it? Those numbers later today. But we can dig in more into that IEA report with Toril Bosoni, who is head of the oil markets division at the International Energy Agency. Toril, good morning. Thank you so much for joining us. Just walk us through the factors that have left demand growth set to soften this year.
Thank you and good morning. Yes, so we have, for the world as a whole, we have oil demand growth slowing from 2.3 million barrels a day last year to just 1.1 million barrels a day in 2024 on average. And we're seeing that's a downgrade from our last monthly report by about 140,000 barrels a day, as the latest delivery data for oil demand, especially in Europe, but also in the United States and other major economies, came in really weak in the first quarter. And as you noted, it's weak industrial activity that is driving this in Europe in particular, but also warm weather, a second warm winter here in Europe. And we also seeing, so biggest impact on diesel market. So diesel cracks are leading the downturn in prices. And so this is the basis for a downgrade and the weaker demand outlook in 2024.
And recently you've started assuming that OPEC Plus cuts are going to stay in place throughout the rest of next year, maybe even indefinitely. But we haven't had an overt signal of that from OPEC Plus. So I wonder what you're hearing that we don't know yet.
Of course, we don't know what OPEC is going to decide when they set their production policy for the rest of the year. They will meet in the beginning of June. Our methodology, our assumption is that until the alliance signals that they will unwind those cuts, we will, our balances, keep them in place to show how the outlook for global oil demand and non-OPEC supply, with those production cuts in place, what that looks like. So based on our forecast for the remainder of the year, we do see some room for OPEC Plus to increase production in the second half of the year, because even as with the weaker demand outlook that we are projecting, non-OPEC supply growth continuing to grow, we're seeing the call on OPEC Plus crude at about 42 million barrels a day in the second half of the year, which is 700,000 barrels a day higher than the April production. So some room for the alliance to increase production temporarily in the second half of the year. But of course, we will wait to see what the producer bloc will decide when they meet in June in Vienna.
And Toril, I just want to bring in our very own Francine Lacroix, because, of course, she's just had a very relevant conversation on this, a panel in Doha on oil. Fran, welcome back to your own programme.
Thank you so much, Lizzie. Toril, I just got off stage and we're speaking to the chief executive of Exxon and Total and also the Qatari energy minister, and they were really pushing back against this idea of peak oil. Given this oil supply-demand equation that you're looking at, do you see that peak fossil fuel demand being pushed beyond the end of the decade?
Thank you, Francine, and good to see you. So what we're seeing, now with oil demand growth continues through this year, next year, and through this decade, but the pace of growth is slowing. That's what we're seeing. And we're seeing that we are with 1.1 million barrels a day demand growth this year. We're back to trend, so the pre-pandemic trend, 2021, 2022, 2023 was really boosted by the post-pandemic rebound. And we're seeing now that it's really the petrochemical sector that's driving demand. We're seeing declines in Europe, for instance. Gas oil demand was declining for a second year running now. Without China, global oil demand growth in February and March were down year on year. So that's clearly signs of a slowdown in oil demand growth. And in our projections, that slowdown, we will see a plateau rather than a steep peak towards the end of the decade based on our current assumptions.
And Toril, if we could just bring it back to supply, what's your message to OPEC Plus? Should they relax the cuts and restore supplies?
Obviously, we're looking very closely and seeing where oil demand growth is coming in. It has been weaker than expected so far this year. This may continue. And of course, OPEC Plus group, they're meeting on a monthly basis and they're watching all the signs themselves. Now, for the third month running, we're also seeing global oil inventories increasing. So both in March and April, we're seeing a very strong oil demand, oil stock builds globally. And this is obviously signs that market, it is relatively well supplied. So this is something to watch as we move forward.
OK, Toril Bosoni, the International Energy Agency's Head of Oil Markets Division. Lovely to have you with us. We thank you. We'll have plenty more from the Qatar Economic Forum coming up. As you look at your screen, you're looking live at pictures of a discussion between Jennifer Zabasaja with the chief executives of Qatar Airways Group and Rwanda. The theme is connecting the Middle East with Africa. And Francine is going to be back after the break with plenty more from Doha. So stay with us for more. This is Bloomberg.
A similar hub with the efficiency, with the design, with the way of the concept.
Welcome back to the Qatar Economic Forum in Doha. Well, China has vowed to take, quote, resolute measures against increased U.S. tariffs. Now, that's after the President Joe Biden announced levies against China imports, including semiconductors, solar cells, and critical minerals. Now, let's get more on this from Reid, a partner at Actum. As always, thank you so much for joining us. I mean, you've also been an advisor to the White House in previous administration, so you understand the way that the White House works. I mean, is Biden actually going after China so that Trump can't attack him on his China policy?
Yeah, so first step is that China is the one thing that unifies Washington, D.C. Everyone's around this. Donald Trump can take credit for it. From Biden's standpoint, this is a first mover's advantage because he knows if he doesn't do anything, then Donald Trump will smack him. But as I predicted and everyone's talked about, this is the first step, phase 2, in the China-U.S. global volatility, geopolitical volatility. It will be much more aggressive next year. So this is the beginning of a much more aggressive push against China next year.
But what happens? I mean, if you don't have China on the global order, do they do their own order? Or does it mean that actually for critical minerals and things like that, the U.S. and other G7 countries need to look elsewhere?
Well, they're going to have to look elsewhere, but they're going to have to find a way to bring China closer to the fold. The United States has been very good about the carrot and the stick. They've been focusing a lot on the stick and not enough on the carrot. They're going to have to figure out what they're for, and they're going to have to bring China to the table. They can't continue to whack them because they're so dependent on them. And frankly, China's doing a better job on the critical minerals, and they're doing a better job on the EV front as well. So you can't just push these guys away. You got to bring them closer, but it's going to be an aggressive posture.
There's hardly any Chinese EVs in the U.S., so this is a policy. I mean, it's not crushing the economy. Is it a warning sign? Is it actually trying just to push them off?
Well, frankly, it means that the Chinese have been doing better. So what they're worried about is the flooding in the marketplace. Tesla, Ford, all these guys are not doing as well as they thought. Demand is way down. Even with the subsidy, as you know, Biden's been very aggressive about subsidies. They're worried about if they let the Chinese guys in, they'll flood the marketplace because the products are just better.
So we've asked a number of heavy hitters, investors, Ken Griffin, also the Exxon chief executive, about change in policies depending on who comes into the White House in November. Who do you think wins?
I think right now it's a very difficult path to 270 for Biden. I think Trump is probably at 47 plus or minus 5. I don't think any one of them gets to 51, so it'll be very close. But I have to tell you, I think the enthusiasm, the momentum is on Trump's side, and I think ultimately Trump may win this thing.
But so the problem, I guess, is that people don't go and vote. I mean, what's your biggest concern?
Well, my biggest concern is, you're going to laugh at this, my biggest concern is, like right now, the price of a dozen eggs is $3. If in November the price of a dozen eggs is over $6, Biden loses. Biden needs to start to talk about things from an economic standpoint. He's talking about chips. He's talking about bridges. He needs to really talk about things across the table. The price of eggs, groceries matter. This is really needs to focus on and stop talking about things that people can't bring home the bacon to, if you will.
So a number of big Wall Street titans who in the past have said, Donald Trump is a danger to our democracy, suddenly are turning around and saying, actually, he's not that bad in terms of policies. What does the U.S. and what does, I guess, multilateralism look like under Donald Trump a second time around? Well,
instead of being America first, it'll be Donald Trump first. You have to understand that this is a guy whose personality is a personality-driven policy, so he'll bring allies closer that have been with him over time. That doesn't always mean he's going to stick with those allies. Surprise, surprise. But I think you'll see him embracing people who have been there for him. Hungary, some of the guys in this region will do very successful. But look, from a global standpoint, America's going to have to figure out things differently going forward, whether it's Donald Trump or Joe Biden. And Trump is going to have to, he can't just beat everyone in submission. You can't sanction. You're going to have to find a way to bring people close. That's why I think 2025 is going to be a massive year, not because it's Joe Biden or Donald Trump, it's because the world is changing, and America's going to have to find a better way to invest and reinvigorate the economy as well.
So Ken Griffin of Citadel believes that actually world politics will get better because if Donald Trump gets into the White House, he's so unpredictable that some of the more murky states will calm down. Any truth in that?
Well, Ken Griffin is a Republican who has invested heavily on the Republican side, so I would predict that he would want that. Listen, I think the world is going to be chaotic. I think the world's going to be upside down. That is not necessarily a bad thing. We're going to have new winners and new losers. So if you look at things, particularly where we sit here, the global south is going to have its moment. So when you're looking at these things, Africa, Brazil, India, Indonesia, this region, the world is changing, so there'll be new winners, new losers. America's going to have to find its place in this new world order. The financial system's going to do well because of the currency, but America, I'm not for sure that it'll be on top the way it has been, but that doesn't mean it has to be a bad thing.
Okay, Morris, thanks so much, as always, for joining us. That was Morris Reid, partner at Actum. Much more to come here from Doha, Qatar. We're here for the Qatar Economic Forum, and this is Bloomberg. Welcome back, everyone, to the Qatar Economic Forum here in Doha. Now let's return to Morris Reid, a partner at Actum. In a previous life, he was also in politics. Is that fair, Morris?
Absolutely.
But you got out.
Well, I like money better.
I've seen enough. Morris, talk to me a little bit about what we're seeing, right? I don't know whether it's a global fragmentation or certainly, countries having to choose sides and what that means for trade. We talk about supply chains, but if this U.S.-China, U.S.-Russia, U.S. in certain places, everything, does it completely redraw supply chains for the next 2 decades?
Yeah, I think people are trying to figure it out, but it hasn't changed much, right? China's still there. Everyone talks about Mexico. Turkey thought they were going to have their moment as well. But at the end of the day, there's going to be winners and losers. I still think that China's going to be the net winner because it's just too difficult to move these things. And China will realize they need the world. They just cannot isolate themselves. They need the world so their economy keeps moving forward. So I expect China to still be the ultimate winner. Mexico could play a significant role for America going forward.
So what does that look like? And again, we talk about U.S. exceptionalism at some point, or U.S. Officials just fighting too many fires across the world.
Yeah, I think it's just going to continue to be a food fight. It's going to be a game of inches, not long passes, if you look at it from a football standpoint. I agree with my friend at the World Trade Organization, Dr. García, that you can't decouple the world. The world needs each other. But there will be, I keep going back to this, will be winners and losers. There will be people that will lean in. I expect Indonesia to do very well. I expect Brazil to do very well. I expect India to do very well. And the reason is they have been able to almost live within their own means. They don't need China. They don't need America. They want them. But their markets are strong enough that they can stand on their own 2 feet. So I think those are the people to really pay attention to.
So how badly will Europe do?
I think it's going to be difficult for Europe.
Because they're stuck in the middle?
Well, there's a couple of things. Number one, the economies are shrinking. The population is shrinking. They don't like immigration. So, look, the thing that has made America great is not because there's been population growth. It's because of immigration growth, right? So I expect those places to be very difficult. I also think that although Europe is thinking about going to militarize their defense thing, it's going to disproportionately mean American companies are going to win those contracts. So, again, they're going to be so dependent on America from everything from goods, products, and services. But I think that Europe will find its footing. I think Germany will be fine. I'm not for sure about France. France has got some real issues around their immigration system, particularly with Muslims, and making sure that they're part of the economic system.
Why are we not talking about debt in the U.S.?
I'm not sure, but I hope that they'll cut interest rate next year. And another thing to pay attention to is, the big tax fight next year. No one's talking about that, but all those Trump tax cuts roll off. So it'll be a big tax year next year. And I'm not for sure why we're not talking about debt. As you know, President Trump thinks that debt is a good thing. I'm not for sure everyone else does because we keep printing more money.
What are you most worried about when it comes to the U.S., economically or in terms of foreign affairs?
Innovation. I'm worried about innovation. I'm worried about America closing the border and not understanding that the reason that America is exceptional is because we welcome everyone. Smart people, people that want to live there and grow a family and grow a business. So that's what I'm most worried about, is that if we close the border, we're going to lose our innovative edge.
But this would be, when you say you worry about that, it would be a change in administration that could bring some of the policies, or is it just talk at the moment?
Well, it's rhetoric at the moment, but Donald Trump will go all the way, and Joe Biden is starting to go half the way, right? So I'm worried about the rhetoric. I'm worried about people not wanting to come to America because they're not feeling welcome anymore.
You're speaking to a number of leaders across the world. Are they trying to Trump-proof their economy? Is that even possible?
I don't know if they're not to Trump-proof their economies, but they're trying to make sure they're on the right side of Trump. And you saw a number of people have gone down to Mar-a-Lago to start that relationship rebuilding or building. This is something they didn't do in the first Trump term. People understand that it's a personality-driven thing. You need to be on his radar. You need to have a relationship with him. to better understand what he wants to get done and how you play a part in that agenda.
Which means what, allies, loyalists?
I think,
is that how you get
look, everyone talks about that. I think it's overblown. Look, this guy likes people that are supporters. He does like the quote-unquote loyalists, but at the end of the day, he will want to move the economy forward, just as Joe Biden will want to move the economy forward. So they'll be looking for partners, but everyone's concerned about Donald Trump because of the last administration. But the reason they were concerned is because they weren't prepared. This is what they're trying to do differently this time. They're trying to prepare themselves.
But will people go and work for him?
I think certain people. Well, I don't think. I have a notion who might be the Secretary of Treasury, but I won't say it. But I think that you'll be surprised that there'll be a number of people that will go work for him.
Next time we interview Maurice Reid, he's definitely giving us the name on air. Maurice Reid, partner there at Actum. Coming up, we talk copper and the transition. Copper futures in New York soaring to their highest ever after a short squeeze. We'll be speaking to Robert Friedland, founder and executive co-chairman of Ivanhoe Mines. That's next, and this is Bloomberg. Global stocks set to hit record highs as investors await today's all-important U.S. CPI print. Meanwhile, the Fed Chair Jay Powell reiterates rates could stay higher for longer. Now, Burberry sales tumble as a UK luxury label warns of a challenging first half. We'll bring you a roundup of a busy morning of European earnings. Plus, the Qatar Economic Forum, powered by Bloomberg, enters its second day. We'll bring you all the conversations from today's panel on energy, politics, of course, finance, and much more. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Doha. So, copper futures in New York have rallied to a record high. Now, that's after a short squeeze that saw the most liquid contract trading at a pretty hefty premium. Now, here to discuss all of this, Robert Friedland, founder and executive co-chairman of Ivanhoe Mines. Robert, what a great pleasure to speak to you again. How often do you look at the copper price? Like daily or hourly?
I almost never look at the copper price, but it's hard to avoid it in this crowded conference at an all-time high.
I mean, it's incredible. Look, it's incredible. Copper is needed for everything we use, especially for the transition. What kind of fundamentals do you see for copper going forward?
Well, Goldman Sachs has said we're in the foothills of the Himalayas on the copper price. It's that simple.
And so what does it mean for Ivanhoe? And have we underestimated the fact that copper will go that much higher and we need so much more of it?
Humanity needs to mine about as much copper in the next 20 to 25 years as we've mined in the last 10,000 years just to maintain global 3% GDP growth. If we're going to dream about an energy transition to power these bright lights and to bring everybody here for this conference, we need to mine the same amount of copper in a very short period of time as we ever have. Most of the world's mines have been deprived of capital, and we need a whole new generation of mines, and we need them to be done in a new way. We need a cleaner, more sustainable way to mine. That's a huge challenge. It requires a higher price to stimulate the capital investment.
So where do you see the price of copper going in the near term?
Well, higher in dollars. If you live in Japan, it was 70 yen to the dollar, then it went to 150 yen to the dollar. So in Japan, the copper price more than doubled in the last year in yen terms, and that's the third largest economy in the world. So the fiat currency that we're measuring the copper price in is the United States dollar. And both the Donald and the current administration created massive deficits. So fiat currency is being printed in dollars. So you're measuring something real in fiat currency. So we think copper is handsomely outperforming the dollar, and will continue to do so.
So you're not giving me a target, are you, Robert?
Higher. Higher. Why worry about it?
When you look at BHP, right, and trying to buy Anglo, I mean, this is a pure copper play. What does it mean for your industry?
No, BHP is trying to get excellent copper assets in Latin America, and this is sort of like a big fish eating a slightly smaller fish. It doesn't create any new copper. When one mining company buys another, it really doesn't add anything to supply. It's rearranging the deck chairs. It's not making a fundamental difference. It's just which management team do you prefer to develop that copper. But it doesn't really add anything at all to the supply.
But it's actually you're gaining in valuation. Have you had takeover offers?
we're gaining in valuation and shrinking United States dollars.
Have you had any takeover offers?
We can't talk about this in these with all these bright lights around.
It's the lights. Otherwise, you'd tell me for sure.
We have all kinds of interesting conversations. That's why we came to Qatar. This is why this is such an interesting conference. Because Qatar is powering the world with its LNG. Without it, these lights wouldn't be on. And we're going to need a huge amount more LNG and a huge amount more copper to have a greener world for our kids.
But so are you expecting more consolidation? Okay, you don't. I know you won't tell me if you've had takeover approaches, but are you expecting, to be fewer copper?
It takes about 10 to 20 years to find a large copper mine. A super giant tier 1 mine comes along, generally once in a generation, and then another 10 years to build it. So a lot of people think it's cheaper to acquire than to build, a lot easier to acquire than to build. And so we do see industry consolidation.
And this is what, to basically be able to front BHP, to be able to compete with BHP, or does it make management sense to get bigger?
Well, if you have a portfolio of commodities, even if BHP were to buy Anglo, Anglo at best, if it sheds all of its non-copper assets, is still only about 54% a copper company. So it's like going to a smorgasbord and only wanting to eat the cream cheese. So it's a very complicated thing to unpack all this. The important point is all this dramatic industry activity, one company buying another, does not result in more production of copper metal.
Robert, talk to me about iPulse. So what are you seeing for iPulse? Are you possibly looking to IPO it?
iPulse is an American 20-year-old unicorn, and its time has come. So we're retaining Wall Street bankers, and we're looking to become a public company within 18 months or 2 years. It's a company that's found a more sustainable way to do a lot of things with electrical energy. It's a fundamental new third way to use electrical energy, and I'm hoping you come visit our labs in Toulouse, France, which have been funded by the French government for the last 15 or 20 years.
Only if you give me a valuation figure. What are you looking at?
Right now, we became a unicorn about 10 years ago. So we'll be announcing some additional equity investment north of $2 billion pre-money. It's a private company.
And Robert, in terms of IPOs, I mean, do you worry that the market will be a lot more volatile going forward? It's not.
No, we don't worry at all about anything because we can't change it. If you have a really great idea, it'll be well received no matter whether the market's up or down.
Talk to me about Western Forelands. Are you finding a partner?
Well, we talk to a lot of people from this part of the world and other parts of the world about what is the most sustainable copper in the world. Because in the aluminum business, if you have hydroelectric power and good bauxite or feedstock, you win the game. In the copper industry, if you have the highest grade and green electrical energy, you win the game. So the Democratic Republic of the Congo is the best place in the world to mine sustainable copper. And of course, we have a lot of interest in that.
You tell me you're talking to a lot of people, but how much, if I speak to you in 1 year, and I hope I speak to you before then, will your business be fundamentally different?
Will say that again, my dear?
Will your business be fundamentally different?
It'll be bigger. Our business will be a lot bigger. Our third concentrator starts up this month. That's a 50% increase. Next month, there'll be a fourth concentrator. There'll be a fifth concentrator. And in the fall, we'll announce our new ambitions, which are much bigger, much faster.
Robert, thank you so much, as always, for your time. That was Robert Friedland, founder and executive co-chairman of Ivanhoe Mines. Well, these are live pictures from the Qatar Economic Forum, Bloomberg's Birgitte, in conversation with the Turkish finance minister and the Philippines trade minister. Of course, we'll have plenty more on this. They are talking about creating competitive economies. This is Bloomberg.
China. So now we are in a path where we build this competitiveness based on cost and on quality, and we are trying to reach the next level to move from a low-cost country to a best-cost country. This is reached, and the next level is to move from a best-cost country to a best-solution country.
Quick question for you, Minister, just as a follow-up. It is the year...
Now, the Ecuadorian dollar bonds have returned around 60% to investors this year, by far the best among emerging market peers. Now, that's in the wake of the country's deal with the IMF last month for a 4-year loan of about $4 billion. Now, the president, Daniel Noboa, took office late last year. But the country has also struggled to rein in public spending and raise oil production. It also faces immense security threats from organized crime. Now, tackling these challenges is one of the world's youngest cabinets in the world, including the country's Trade and Production Minister, Sonsoles García, who joins me now. Minister, thank you so much. It's really a great pleasure to have you on the program. We're talking about trade agreements and the fact that you're also trying to clinch a deal with the U.S. and some of the duty-free with Canada. Do you think that can be achieved before the U.S. presidential election?
Well, thank you so much for having me. Well, we just started negotiations with Canada for an FTA late on April. And it's starting, going good. In terms of the U.S., we're trying to pursue two different preferential systems. The IDEA Act, which is one where Ecuador will attach to the CBI, that is for the Caribbean countries, preference system, or try to renew the ADT-PDA, which was created for Andean countries back in the late 90s, and it expired on the 2012, and Ecuador did not renew it, and right now, pues, Ecuador doesn't have an FTA with the U.S., and we are trying to see if the channels between Ecuador and the U.S. can be profounded. Right now, we do not have an FTA with them.
Minister, away from the U.S. and Canada, I know there's also been a bit of a crisis with Mexico. What kind of deal are you seeing in terms of trades?
Well, right now we have a trade agenda for openness to the world. We have the negotiations with Canada. We are going to start negotiations with Dominican Republic as well, and with the UAE as well. We just signed a joint declaration like 2 months ago with the UAE, and we will start next semester the negotiations for the CEPA. And in our trade agenda, we have to do the signing with South Korea, and we just announced 2 months ago that we just approved the FTA with China, and with Costa Rica passed for Congress.
Minister, give me a sense of what you're trying to do to attract more foreign direct investment. Your country is still lagging a little bit behind some of the other countries in the region. I know there's been trying to strengthen international arbitration that was voted against. What's your plan?
Well, right now we have a workshop round table with a lot of ministries, with the IMF, with the World Bank, with IDB, and all the international experts trying to see how we can establish a public policy for economic development and economic growth that can, stay. And it doesn't matter which government is in office, the public policy doesn't change, because what investors are pursuing is stability. And we think that probably next year, when President Noboa is re-elected, we can try to pass this law on the Congress, and probably will be more attractive for investors. But right now, last week I was in AIM Congress in Abu Dhabi, trying to attract investors' attention. Also, we had 5 urgent economic laws that were passed in the last 5 months by the president, and we created some investment tools such as free zones, which we think that could be a good idea for investors. And we also have the PPP projects that are approved for investors to look at.
Minister, public safety is a huge concern that's also holding back investing in the country. What can you do about that?
Well, I think that the referendum was really good for, safety in the lawmaking, and how the public policy is going to change in terms of criminality, and how the police and the military can be on the streets every day trying to see and pursue criminals. And President Noboa is very upfront in the fight against narco-terrorism organizations, and I think he's doing a great job. Right now we feel safe at home, so that's a good feeling, that we were not safe before, that you can go out and have dinner in a restaurant at night, And I think that probably with time, we will feel more safe. We will see the numbers because the numbers, speak directly to investors. And I think that probably in the next months and probably next year, we will see the results of that.
Minister, very quickly, what about energy? I mean, there's also been energy concerns that have led to blackouts and, of course, affecting many households. How can you get a handle on that?
Well, Ecuador depends 70% on hydropowers. So when we had the worst drought in the history of Ecuador in the last 50 years, and all our dams were, very dry, and we didn't have energy to have from, and Colombia was having the same problem, and they were not able to sell us energy. Right now, President Noboa has a plan to invest in non-conventional renewable energy, such as solar and wind. But, to change the dependency on hydro right now, it will take us almost 5 years to Ecuador. So we have to do the investments, but it won't be a quick change. We have to take it step by step.
Minister, thank you so much for your time today. That was the Ecuador Trade and Production Minister, Sonsoles García. Now, coming up, we're joined by the new Chief Executive of renewable energy giant, Norway's Statkraft. That's next, and this is Bloomberg.
The climate situation we are in is clearly a very, very big problem. We had the hottest year on record last year. It started to have impact in many, many different ways. You see it in the reinsurance prices. You see it in a lot of, worse harvests. It's leading, in some cases, to increased immigration. So it's impacting the world in very many different ways. Now, at the end of the day, this is actually a financial risk because it's a risk to the value of the fund. And if you're invested across the world and one company pollutes, you can't hide, right? Because you capture that pollution in all the other companies you own.
Well, you can see the full interview with Nicolai Tangen, the Chief Executive of Norges Bank Investment Management, on Leaders with L'Aqua Goes Green, airing at 9:30 p.m. New York time tonight in the U.S. and 6:30 p.m. London time on Thursday. Now, according to research by Bloomberg NEF, European firms nearly doubled their purchases of clean power in 2023, as many corporations set targets to increase their use of renewable energy in a bid to reach net zero. Let's take a look at the outlook for the sector. Our next guest is the newly appointed leader of Europe's largest renewable energy producer, Birgitte Ringstad Vartdal, the Chief Executive of Statkraft, joining us today. Thank you so much for taking the time to speak to us. There has been a number of setbacks in your industry throughout the years. What's your biggest hope going forward for renewables in Europe?
Thanks for having me, Francine. It's a pleasure. We have a strong belief that the renewable industry in Europe will continue to grow. As you mentioned, currently there is a setback, seeing increasing costs and also seeing prices normalize after the very strong power prices and the energy crisis over the last 2 years. However, the fundamentals for renewables in Europe is strong, and we believe in a strong growth going forward. Particularly, we see solar and battery costs going down. We see wind power costs leveling out. And then some of the technologies are slightly delayed in terms of costs are higher and technology development are higher. But we see that that also will come over time.
I was going to ask you what you see as the biggest opportunities. You also have a number of operations, wind and hydropower assets, for example, in countries like Chile, Brazil, Peru, and India. Do you see those expanding in the next couple of years?
Yeah, we have a broad portfolio in 21 countries, and we try to balance our opportunities. Lately, we have had significant expansion in Brazil with both acquiring wind production and also developing our own projects. We strongly believe in a diversified portfolio across our markets.
I think you're planning to spend between $4 and $6 billion to upgrade some of the hydropower, of course, and wind facilities in Norway. Are you confident this will be enough to future-proof, actually, the future of the country?
Well, Norway is in a very strong position when it comes to the electricity production. We are already almost 100% renewable, based on a strong hydropower fleet. As you say, we have announced the ambition for significant capacity upgrades on our hydropower, in addition to wind development onshore and offshore. Together with other producers in Norway, I think the opportunities to really continue to fund and develop the Norwegian power sector, also being competitive for the industry, is important, and it is an opportunity that we will grasp.
The occurrence of negative pricing actually in electricity seems to be more frequent. Does that impact how you look at the market and investments?
Well, this is with a more intermittent energy coming into the market of solar and wind. This is something that we will see in the market going forward. With our experience on optimizing weather-based systems and managing the flexibility from hydropower, we are also bringing other technologies, flexible technologies to the market, like batteries, like rotating stabilizer, allowing the total energy system to be robust. And these negative prices is also an opportunity to create value on the hydropower, on batteries, and also for flexible hydrogen production in the future. It is a treat of the system that I think we need to manage, and our company and our employees' competence is really core to support this development.
But do negative pricing, does it mean that the market is broken?
It doesn't mean that the market is broken, but it means that we need to manage the intermittency in the market. That we have negative prices from time to time means that there is oversupply. I also believe that going forward, we will see more adjustment on the demand side, adjusting the demand to these prices. And it's actually about optimizing the market better than what we see today.
You're fairly new to the role. The previous chief executive has stayed on for 14 years. Do you already have a clear idea of what kind of changes we can see at Statkraft?
Yeah, so I've had the role for 1.5 months, spending my time both to get to know the organization and our engaged employees. But also I've announced that we will sharpen our strategy. I've announced some divestments. And we also have a record growth investment plan this year that we will focus on delivering on. So it is about sharpening the strategy, enabling us to deliver faster and more of the renewable energy that we are so dependent on.
Well, it's a real pleasure to interview you. Thank you so much. I know this is just the first of many interviews, I hope at least. Birgitte Ringstad Vartdal, the chief executive of Statkraft. Now, let's look at some of the individual movers. In Europe, we're looking at Experian, a couple of others, ABN AMRO. So Experian jumped after reporting full year earnings. ABN AMRO actually a little bit lower, and then Burberry dragging the consumer goods sector lower after reporting a slump in sales. This is Bloomberg. Plenty more from Doha.